Well, let's take a closer look at the US election result and what it means for the Asia-Pacific region. I spoke a short time ago to Brendon O'Connor, Associate Professor from the US Studies Centre, and John Noonan, Senior Currency Strategist with Thomson Reuters. Gentlemen, welcome to the program.
Good morning, Whitney. Good to be with you.
Now, Brendon O'Connor, if I could just start with you. Barack Obama received less electoral college votes this time around rather than building on that vote base as many second-time presidents do. So what does that do to his leadership then?
I think it will be a pretty overwhelming victory. I think he'll have a sense that there are big problems to confront, and the best chance to confront them is while this fiscal cliff hangs over the Congress. So it's a game of economic chicken to some extent. We've had a policy-like campaign. We're going to have a very policy-heavy next 2 months. There's going to be lots of arguments about details, and I'm not entirely optimistic, but I'm reasonably optimistic that a deal will be achieved. It might not be the right deal. It might be a compromise with lots of faults, but I think a compromise will be achieved because neither party really wants to go, clearly doesn't want to go off this cliff. They don't want the automatic changes to occur that are set in place with the spending cuts for different reasons, and Obama will probably compromise on tax. He'll want to increase tax for the very wealthy to some extent, but he'll want to see the middle class tax cuts of the Bush era stay. So there's a fair amount of room for reasonable negotiation. Not that that's guaranteed when the President and the Republican Congress get their heads together, but I think some negotiation will, occur from these talks.
And John Noonan, in your view, given that we haven't really seen much of a change, Republicans remain in charge of the House of Representatives, it's pretty much the same picture we saw before the election. What does that mean for America's economy then?
Well, I think one of the things the markets were very worried about is normally markets love status quo. There's less mystery about it. But this status quo harks back to the middle of 2011 when the same players, the Democratic House, Democratic White House, and Republican House of Representatives, got together and really made a mess of the debt ceiling crisis and led to the S&P downgrade. So I think that's what's weighing on investors' minds at the moment. Will they be able to come together, as Brendon say, and come up with some kind of deal, show some sort of compromise? And I, too, am optimistic that they will be able to. I think Obama has learned a lot from his first term and how to deal with the goings-ons in Washington, and I believe too that he will want his legacy to show that they've made progress in that regard. But
so you're not of the view that we're headed for more political gridlock like what we saw with the debt ceiling negotiations?
Well, I think what they'll do is just a slight difference from what Brendon said. I think what will happen is they'll come up with some short-term solution to avoid the fiscal cliff, sort of take something out of the European playbook and kick it down the road a little bit, and at some stage later on, past the end of 2012 deadline, we'll have to get together again. I think it's going to be a very difficult job. I think that some of these issues are near and dear to both sides' hearts. Cutting entitlements will be very difficult for some of the left of the Democratic Party to do, and the idea of tax hikes, even if it's for the wealthy, will be very difficult to push through a Republican House. So it's going to be difficult, but I do have hope that they will come up with some sort of plan. Whether it's a grand plan or not, that's another question.
Well, that seems to be the overall message that has come out of this election result, is that it's a bitterly fought campaign by both parties, but both sides, many are calling for both sides of politics to work together in the wake of the result. So let's just take a look at what some of these have had to say overnight, starting with Harry Reid, the Democrat Senate leader.
The election's over, and we have enormous challenges ahead of us. They're right here. And we have to sit down and go to work on it now, not wait. This was really the message the American people sent from all over. And that is, they're tired of these partisan gridlocks. They're tired of things like, well, I have one goal, defeat Obama. That's gone. Obama was reelected overwhelmingly.
Well, you can ask it the other way, too. How willing is a reelected Barack Obama and a newly energized Democratic Senate willing to work with the Republicans in the House? At this point, I think all we can do is, in America, we call it kicking the can down the road. And the road's ended. We were at a dead end. So all we can do is hope that the grown-ups come to the table and say, okay, clear the decks. The president's not running for election. John Boehner, the Speaker of the House, probably is not running for re-election. Let's get a deal done and move ahead.
President Obama will use that fiscal cliff, that is, let it go into effect temporarily as a way of creating a baseline from which the Republicans will need affirmative legislation signed by the president to achieve their objective.
Brendon O'Connor, will the president let the fiscal cliff happen to push the Republicans over the line?
Well, tactically, that would be the sensible thing to do, to let the tax cuts expire at the end of this year and let those spending changes come into effect early next year. Then the president has the cards in his hand. He's the one who can say, OK, you've got to negotiate with me now. I'm not up for re-election. You're up for re-election, most of you. So that would be the brinkmanship tactic. Whether it would gain friends in the Congress might be a big question.
Probably.
I mean, Obama, on one sort of read of this, really needs Boehner to negotiate with him and come to a sort of centrist ground compromise. But Obama will be tempted to isolate the Tea Party and say the Tea Party have got control of the Republican Party. They're economically illiterate. They nearly made this argument last year that the United States shouldn't pay its foreign debt, and paint the Republican Party as the Tea Party, as an electoral strategy. That would be high risk, maybe for high gain, and I don't see Obama's personality driving him that way. But I think from the 2011 experience that was talked about before, Obama himself probably needs to learn a lot from some of the playbooks of previous presidents, maybe Lyndon Baines Johnson, in terms of how to negotiate with Senate and House leadership, particularly Boehner, how to woo them, how to have them over for dinners, play golf with them, and get them to compromise. Because I think there's a lot of ill feeling at the personal level between the leadership in the Republican House and the president.
John Noonan, if the president were to allow the fiscal cliff scenario to happen and hold the Republicans' feet to the fire, so to speak, what effect would that have on markets globally?
Well, they wouldn't like it much at all. I think it would terrify the markets. I think it's one of the reasons markets sold off today, just in case that sort of thing does happen. They really don't want to see that isolation. It might work tactically in the long run, but in the short term, it would certainly unnerve the markets. The ratings agencies have already spoken out. Moody's has already come out and say we want to see progress towards compromise on dealing with the fiscal cliff and other issues. So, I think it would be very unnerving for markets if that high-risk tactic was to be employed by the president, and I'd be surprised if he would go that way unless the Republicans still go down the Tea Party line. Now, I don't think it's in the Republicans' best interest to allow the Tea Party to call the shots to set the agenda. It's already shown that, nationally speaking, it's going to make them that much more harder to get elected in the future if they do.
Are we in for more a protracted downturn on markets, do you think?
I don't think so. I think the market's overreacted a little bit today. I think if you look at since Obama's been elected, the Wall Street, the S&P's gone up 50%. Bond markets have done very well. The commodity investors have done extremely well. One of the reasons for that is because they have a very accommodative Fed, and Romney was, going to just try and change that. So I think the markets overreact a little bit today. I think there will be deals done between the Republicans and Democrats to get things moving forward, and I think that the rest of the world, in particular, will be a little bit relieved. I mean, the relationships with China, a very important trading partner for us and obviously for the U.S., they must be feeling relieved in China about the results. So I think, by and large, the markets will get past this, and the sell-off that we saw last night was temporary.
John Noonan, I'll just stay with you for a moment. On Wall Street, now President Obama wants to tax dividends at a higher rate. He also introduced financial regulation overhauls in 2010, which is still unwinding and having an effect. Some analysts suggest that there will be even a tougher stance. What's your view on that?
Well, I think, so we're seeing this world, it's a global phenomenon. There are some in Europe who say the U.S. hasn't gone far enough, and that previous Secretary Treasurer, we expect him to leave, Geithner, was very protective of Wall Street as far as a lot of European regulators were concerned. So I think it's been a pretty balanced view. You'd never hear that from people on Wall Street. I think some of the biggest contributors to the Romney campaign were coming from Wall Street to be affected. But I think when you look at the banking sector in the U.S., yes, maybe those wild growth and profits that they saw pre-GFC, maybe those days are over. But other sectors of the U.S. economy, clean energy, those will be very much helped by this second term of Obama. But the banks will be held in check, and I don't think the world sees that as a bad thing.
All right, let's look to Asia. Now, Dr. Wang Jing from the National University of Singapore has said that the fiscal cliff can have a negative effect on the region as well. Let's just take a look at what he had to say.
So if Obama facing a strong resistance from conservative forces in the House, that means, number one, the policy in the making will be very ineffective. Even if policy is adopted, then its implementation could be also ineffective. All of this could, of course, damage or do damage to whatever effort to promote U.S. economy, and or even disastrous deadlock like before. Of course, if that's the case, then the impact on this part of Asian Pacific will be very negative.
So, Brendon O'Connor, China is, as we mentioned, is going through its own leadership transition as well. To what extent will that play a role in the U.S. political landscape?
Well, what was remarkable about the debt ceiling debate of 2011 was that there was barely any mention of the rest of the world. It was an incredibly insular debate within the United States. There was little talk of how this would affect other economies, how it could lead to a global downturn. That sort of sense of responsibility that the US holds in the world in economic terms was just so absent from the debate, and particularly the Republican side of the debate, but there wasn't much from the Democrats either. And I'd hope that maybe some of these foreign voices, some of these exchanges of, good luck that are being sent to both Obama and Boehner are saying, look, the world economy relies upon the United States to do the right thing here, and that the United States needs to come to a solution to help all of us. And that message, I think, needs to be sent very clearly, because the 2011 debate was an incredibly sort of inside Washington sort of debate regarding, debt really as a moral problem rather than a global economic problem.
John Noonan, the Wall Street Journal is reporting this morning that Asia is breathing a sigh of relief because Mitt Romney did promise to label China a currency manipulator on day one. But to what extent will that have echoes? Because, it is still an issue in the United States.
Yes, it was, but I think as Timothy Geithner learned very early on, that's not the way to deal with China, is to, threaten them and play brinksmanship. It doesn't really work. There was similar type of language coming out of the Obama White House when they first came into power in 2008, and, they scaled back quite a bit. I think that China will be quite comfortable dealing with the Obama White House, whoever succeeds Timothy Geithner, because they realize that, it's a player that they know and how they're going to deal with things. And I don't think we're going to see a change of rhetoric or a heightening of the rhetoric from the Obama White House on China being a currency manipulator. In fact, China has taken steps to reform their currency policy and strengthen the yuan anyway. So I don't see that as being a major issue. It would have been more of an issue if we saw a change of leadership and Romney coming in as president.
Now, China, John Noonan, has not been able to switch its economy to a domestically driven, focused economy as fast as it wanted to. If the US were to fall off the fiscal cliff, which is very undesirable, to what extent would China follow suit?
Well, if the U.S. economy was to go back into recession right now as a result of falling through the fiscal cliff, that wouldn't be good for anyone, as Brendon said. The global economy, the last thing it needs right now is the U.S. falling back into recession. It may interrupt China's transition towards a consumer-led economy rather than depend on fixed asset investment and exports. They would probably go back to, weakening the yuan as much as they can to compensate. So it would be it would disrupt what China's trying to do. The leadership change is going to be very interesting to see how many conservative hardliners are going to be in the policy-making committees in China. But I think China is pretty much committed to this transition because they see what's gone on in Europe, they see what's gone on in the U.S., and they don't want to be as dependent on those economies anymore.
Gentlemen, we're out of time. John Noonan and Brendon O'Connor, thank you for joining us.
My pleasure.
Thanks, Whitney.